Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
Global markets traded mixed, with most US and European stock indexes ending firmer, while emerging markets finished on a negative note. The Dow Jones Industrials gained 2% on the week, the S&P 500 added 0.7%, but the tech-heavy Nasdaq indicators fell nearly 1%, on the back of declines by mega-caps names like Tesla, Alphabet and Meta Platforms. It was a busy week for earnings reports by US banks, which came in mostly on the positive side, with Bank of America and Morgan Stanley beating estimates, while Goldman Sachs missed profit estimates on unimpressive trading and investment banking results, as well as a negative impact of write-downs at its consumer lending unit, GreenSky. Nevertheless, shares in all three banks gained between 8 and 10%. Tesla beat top and bottom estimates, as it reported record quarterly sales of $25 billion, but disappointed analysts during the conference call when Elon Musk acknowledged that car prices would need to be cut further, and margins will be tighter. Tesla delivered 466,000 vehicles, and produced 480,000 during Q2. Shares dropped 8% to $260. Healthcare giants United Health and Johnson & Johnson reported solid figures and shares advanced between 5 and 6%. There were no monetary policy meetings by developed central banks last week, and the Fed, ECB and Bank of Japan meet next week. The key economic data release was UK inflation for June, which printed better than expected, with CPI at 0.1% month-on-month, and 7.9% year-on-year. Core CPI came in at 0.2% and 6.9%. Both, the headline and core readings, were lower than a month earlier. The decline was largely due to a drop in energy prices as fuel costs plunged 23% in June. The good inflation reading lowers the pressure on the Bank of England to hike interest rates by a large amount, and resulted in a fall of 1.8% of the British pound against the dollar, to 128.55. British gilts were the only notable sovereign bond movers, with prices shifting higher across maturities, and the two-year yield dropping 25 basis points to 4.94%, still the highest among developed countries. In other markets, 10-year US Treasury yields closed at 3.84% and bonds at 2.43%. The Bank of Japan signaled it will maintain its ultra-loose monetary policy and keep supporting its yield curve control mechanism ahead of next week's meeting. The yen posted its worst week since October, with a 2.2% decline to 141.80 per dollar. Futures markets are pricing in an almost certain chance that the ECB will hike by 25 basis points to 3.75% on its deposit rate, while the Fed is also projected to lift rates by the same amount, to 5.38%. The Bank of Japan is expected to maintain rates unchanged, at -0.1%. Moving on to emerging markets. China reported that its economy expanded by 0.8% quarter-on-quarter, a noticeable slowdown compared to the 2.2% growth in Q1. The annual figure came in at 6.3%, mostly due to the low base a year ago as the country emerged from the COVID restrictions. Mainland's CSI 300 and Hong Kong's Hang Seng indexes fell 2%, and are among the few global indexes to be in negative territory this year in dollar terms. Regarding monetary policy action in emerging markets, the Chinese central bank left its LPR, or loan prime rates, unchanged at 3.55% for one-year loans, and 4.20% for the 5-year. Turkey surprised analysts with a smaller than expected rate hike, up by 250 basis to 17.5%, and signaled further tightening measures. Ankara raised taxes this month which are expected to impact consumer prices. South Africa's Reserve Bank kept rates unchanged at 8.25% but did not rule out further increases, following 10 consecutive hikes, while Russia lifted rates by more than expected, 100 basis points to 8.5%. Over to commodity markets. Russia formally ended the Black Sea grain export deal with Ukraine last Monday, stopping shipments from one of the world's largest grain suppliers. Moscow attacked Black Sea ports for 3 days in a new escalation of the war, further limiting the transport of goods. Wheat futures rallied 9% to $6.97, while corn fell 12% on improved weather conditions in Brazil and the US. In the crypto sector, markets were little changed following the strong rally for altcoins a week ago. Bitcoin is now dealing at $30,000 and Ethereum at $1,890, modestly lower in the past 7 days. Some notable movers include Solana down 12%, Toncoin up 12%, and both Chainlink and Stellar, gaining 17%. Next week's calendar. Besides the Fed on Wednesday, the ECB on Thursday and the Bank of Japan on Friday, we have Indonesia, Hungary and Ukraine also holding policy meetings. It will be a very active week on the earnings front as Microsoft, Alphabet, Meta, LVMH, Nestlé, Exxon and Chevron, among other blue-chip companies, report results. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription service. Have a good week.